Hello traders, this is Rich from Tradesight. So look at the market preview for the coming session. This is going to be for Thursday, January 23rd, 2013. A kind of a lackluster day as far as overall movement goes, with the exception of the NQ futures, which did close at a new high on the move. The S&P didn't do too much. The Dow Jones didn't do too much aside from IBM detracting a little bit. Internally, the market was okay. Definitely the New York side, as you can see, was stronger with 900 advancers, and the Nasdaq side was 400 advancers. The New York trim was at 1.30, so we're definitely moving up there on the 10-day trend. So we'll circle back and take a look at that in just a little bit. Let's move on and take a look at the major futures contracts and see what they have to tell us about the levels and also the bar counts. All right, here's a look at the ES futures. We closed basically unchanged on the day. It was a small range day. We're essentially contained within the previous day's trading range, so it really didn't do too much to move the needle technically. We did come down and touch the 10 EMA, used that for support. Got up, took a little bit of a shot at the 7/8 level, which was also the range high on the move here, and never really were able to do anything either way on that. What we want to do is keep an eye on the breakout above the previous range. So to the upside, 1843 3/4. To the downside, previous day's range, 1825, 1826. So that's going to be the area to watch. So there's really nothing new technically here from the market until we break out of this range. Nasdaq futures, on the other hand, did close at a new high on the day. We gapped up on the day, went a little bit higher on the day, a little bit lower, but essentially. But at the end of the day, did tick off a new high on the move on a closing basis and also an intraday basis. So we're moving up a little bit closer to the next level, which is the 7/8 level at 36.72. Note that we are 6 bars up in the seeker setup phase, so we got about another 3 bars before we run into any kind of a bar count problem. To the downside, if we do break to the downside, we're going to find some support here at 35.94, which is that 6/8 level, and just a little bit below that is going to be the 10 EMA coming in to help it out. TLT, the bonds had a bit of a rough day today. We are still short-term positive, but we did have an outside day down. We opened up, traded to a new high by a tick, and closed below the previous day's range. So we do have an outside day down here. We're still below that 4/8 level at 106 1/4, which is going to be key resistance if we get there, and also definitely something that's kind of a target to complete this move to the upside, at least at the minimum. To the downside, we're going to have support at the 2/8 level where that comes in and converges with the rising 10 EMA. Let's take a look at the oil futures. Oil futures were pretty strong today. They burst above the 50 and got up to the 3/8 level. We're 6 days up in the count right now. If we do continue to the upside, we're going to have some strong resistance with the static trend line coincides approximately with the 200 period moving average. To the downside, we're going to have a little bit of support at the 50 and then better support at the 10 EMA if we do retreat back to the downside. Note that we do have a MACD cross to the upside now again, but we are not above the 0 line, signifying that we're going to have any kind of real momentum just yet. The oil futures were, the gold futures were pretty lackluster today. We lost a little bit on the day relative to the previous day's close, but it was essentially an inside day. So keep an eye on this close from yesterday at about 12:36, 12:37. That's going to be real important. To the upside, the range has been set. 1254.5 is definitely the level to the upside to watch. Now let's turn our attention to the market internals. Let's take a look at the advanced decline lines first. These are the cumulative advanced declines. We did make a new high on the New York side, so the New York side is definitely positive. The Nasdaq side made a new nominal high, so we're printing new highs on both sides. So we don't have that divergence yet that we have to worry about as far as the market really just grinding and running out of gas with too few issues really supporting the market. Keep an eye on the Nasdaq side. The Nasdaq side tends to turn first. We did have a new high in the market, but the advanced declines were not that positive on the Nasdaq side. We're only up 400 issues on New York, which is kind of skinny. So keep an eye on the NASDAQ side. For now, we're okay, but we don't want to see this start to kind of deteriorate into some kind of a divergence. Here's a look at the NDX S&P cross. So now we're evaluating the relative strength of the NDX. We did make a new high in the ratio, so when this ratio is on the rise, that means that the NDX has relative strength over the S&P. So we still have that condition present right now, and that's generally healthy for the market. So this is a key thing that's still working in favor of the bulls. Here's a look at the relative performance chart of the oil services. That's the red line versus the oil futures themselves. Oil services have been holding up very well. We didn't really experience that roll down that we did have in the crude futures themselves. Crude futures are now working on the double bottom here in this general area that we're trying to pivot off of. So expect that we can see crude pop back up here, at least to the most recent high, which is right around $100 a barrel, as long as the OSX holds up here. Here's the curious thing today, that even though the averages were fairly decent today, even though we didn't make a lot of headway with the broad market side, the 10-day trend did move up today. We're up to about 1.26 now on the 10-day trend. The intraday trend closed at 1.30. So we're definitely getting some high readings. We had a couple of high readings already this week. So we're definitely approaching the actually oversold in the 10-day trend rather than overbought. This just means that the market has fuel in the tank to the upside right now and is actually closer to oversold than overbought according to this key measurement. Alright, so here's a look at the multi-sector daily chart. It had good performance out of the stocks today, making a new high in the move. That's the green line, the blue line rather. We had good performance out of the banks relative to the broad market averages. The BTK, however, did turn down, was a little bit negative in the XAU that represents the gold mining shares, was lower on the day. All right, let's take a look at the individual sectors ranked from best to worst. The hardware was definitely the top gun today. Not by a lot, but they definitely outpaced the airlines, which were also very, very strong. Airlines are not really anywhere near any kind of a seeker or a Comer signal. The hardware index is now 12 days up in the Comer count, so that's definitely something to be aware of. The semiconductors are 9 days up now, according to the seeker count, so definitely keep that in mind. So we're going to be bumping up against a little short-term resistance there. The consumer Morgan Stanley index is now 11 days up in the seeker count, so we're getting within shooting distance of getting a signal there to the downside. Worst sector on the day was the XAU, which was taking a little out of there. Still a source of funds. I don't know how much more they're going to wring out of there, but definitely down and out. The BTK index was notably weak after some pretty good pops in the morning, but they didn't hold up very well. So let's move on and take a look at a couple of these key charts. All right, so here's a look at the XAU. The XAU did reach its target, which was the active static trend line. Hit that yesterday. Today, distribution day to the downside. We're not quite done with this 9-bar run. We're 8 days up right now. So expect some support here at the 10 EMA if we roll down that far. BTK index was also pretty sloppy today, and I think that deserves looking at as well. BTK was one of the worst performers on the day, and certainly was higher before it turned lower on the day. BTK index now is definitely pretty deep into the overbought territory. We're up close to the +2/8 level on the Murray Math box. We've got a good bit of distance above the 10 EMA, so we're starting to get a bit stretched here. You can even see from the MACD we're pretty high up there. If you take a look at the CCI, we're starting to lose a little bit of momentum here. So this is definitely something where probably is going to need a little bit of consolidation to work off this last breakout, which was above the 5/8 level here. So we've got pretty good movement to the upside here off of that breakout. So definitely keep these things kind of on the side, on the long side, unless you see something that's going to squeeze intraday. And if you see anything that might be forming a key reversal, definitely don't pass on that, because we've got the power of this +2/8 level not that far away. Now let's take a look at the top gun, which was the hardware index. We broke above the 8/8 level in the HWI. So now we're just starting to nudge into the beginning of the overbought territory. You can see that we've had a pretty good run to the upside here. It's been relatively uninterrupted, which implies it has not yet corrected. So this is getting a little long in the tooth without a correction. So now that we're in the overbought territory, now I have to start playing a little bit more conservatively on the long side and start thinking about some potential reversals to the downside. All right, folks. Well, good luck to you tomorrow. Tomorrow's Thursday. We're going to start with a little bit of economic data tomorrow. We're going to have the ADP number and a couple other things out as well. So we'll have a little bit more to trade off of. We've got a little bit of data on Friday as well. So hopefully we'll get a little better reshuffling of the deck and have some better afternoon movement. All right, folks. As always, thanks for listening. This has been Rich for Tradesight.